Hi everyone, I'm Lewam Kefela. Welcome to the Africa Playbook. Today's episode, we will be discussing the state of Africa tech with one of my favorite people, Tidjane Deme, a general partner of Partech Africa. Full disclosure, he is also my boss, although he tells a lot of people that he's my intern, which offends me a little bit because he does look younger than me. Let's get started. Tidjane, tell us a little bit about yourself.
Oh, wow.
Are you? Who is Tidjane Deme and why do you do the work that you do?
Do you want the full story?
I do want the full story.
No, we don't have time for that.
Yes, we do. We have time for that.
No, I'll give you actually the real story. The real story being that I am a nerd and a techie who grew up in the 90s in Africa. And it was a time when internet was picking up. And it felt like it was changing the world. And I think this makes me the sort of tech optimist I am today. Like we all grew up believing that this internet thing would turn into something that changes all our lives, that we use to solve all problems, which it turns out to be, right? So I'll say I'm a tech optimist. That's one way to answer your question.
Yeah.
But related to what I'm doing today, I think probably the most relevant thing is that I am a failed entrepreneur. I tried, it failed, and now I'm working enabling other entrepreneurs to succeed, which is maybe one way to be an entrepreneur by proxy. I'm a failed entrepreneur because I grew up in Senegal. I moved to France for my studies. I went to engineering school. Again, it's the 90s, internet is there and everything. But it was very quickly clear to me that I would not, be able to live a life and make a career in a corporate world. Too much attention deficit, probably, but too many exciting projects out there. So with a few friends, we started a first company in France. I started a second company in Senegal, which I failed brutally. And I mean, coming back, and this may be something we have to explore later, but this whole, I was in the diaspora, I'm going back to Africa, and I start a company and change my country, is a bit delusional because you left your country when you were too young, didn't know anything about the country really, don't know how things work, and you don't know it. It's not that you don't know that is a problem, it's you come and start a company assuming you know all of this and you don't. So you fail, unless you were a genius or very lucky. I was none of those, so I failed. I started another company that worked out. But so yeah, here is how I ended up back in Africa, working in technology, learning about the whole continent, working for Google, and I started meeting entrepreneurs younger than me who I felt were going through the same journey. I had a lot of empathy for what they were doing.
Yeah.
But for the first time, I also felt like they had a shot at it, that they could get some level of support and they will get it. They will do that transformation we dreamed about.
Yeah.
And so I think that's ultimately what my job today is about, helping them turn that shot they have at it into a real, impactful African innovating business.
That's amazing.
That's
the start.
Yeah.
Okay, so you started as a failed entrepreneur, you tried, you failed, you saw the pain, and then you decided to help other people do it.
I'm not sure help is the word here, more than be part of what they're doing so that I can say I made it.
Yeah.
But yes, there is the component about bridging between what they're doing that I know and understand and the sort of levers they have to access capital, to access strategic partnerships, etc. That because I've had a whole career in tech, I had access to that part. So being that bridge, but most of the time it's just about watching them do stuff and getting amazed at what they do.
Yeah, that's amazing. So after that, how did we get to Partech and how did we get to Partech Africa?
Yeah, that's a funny story.
I know, I love that story.
When I moved to France to do my higher studies, I met this interesting character. When we were in school, you know how African students get together somehow, find each other, and hang out?
Yeah.
There was this guy who was technically French, but who talked like us, behaved like us, and gravitated to the same groups because actually it was his first year really in France. He grew up in Africa.
Oh, wow.
So Cyril Collin, my partner who's co-leading Partech Africa Fund, is a friend of 30 years, really.
Wow.
And so he grew up in Africa. He studied in tech. And we ended up in this, what we call the African connection, where we were all Africans in the telco and technology space in Europe. And we worked, all of us, we worked for these global technology companies and tried to work in Africa or on something related to Africa.
Yeah.
In a way. So we would bump into each other now and then in some random African country doing some projects. But I mean, to make the story short, a few years back, he randomly calls me and say, Tidjane, I think I have something for you that will help you leave Google. He literally said he would help me leave Google. As if that was a very... he rescued me.
Yeah.
And so we met for coffee in Paris. And halfway through the conversation, I was already drafting my resignation letter.
Wow.
He just said, listen, you've seen what entrepreneurs are doing in Africa right now. Actually, the way he said it was, you've seen these kids.
Yeah.
They're good. They have ambition. They're trying to build great things. I was yes. And he was like, I think we can help them get capital. And this is what I want to do now. This is my way of, supporting, enabling African entrepreneurs. And so my first response was, but Cyril, we both don't know anything about investment.
Yeah.
Which is absolutely true. We were both techies and didn't know anything about investment.
Yeah.
He said, yeah, I thought about that. I think we should find some partners or some firm that can help us do this. And I mean, the response was obvious because there is this firm called Partech, a global investment firm, back then investing only in US and Europe.
Yeah.
Where we had very close friends. Romain Lavaux, who was the partner in charge of the Partech Seed Fund, was my classmate in engineering school. Yeah. It goes way back.
Yeah.
And Cyril also knew the managing partner, Philippe, socially. So we made a list actually of 2-3 firms we wanted to approach and say we want to do an Africa fund. We only ever met the first one.
Oh, wow.
We met Partech. We sat down with Romain and Philippe.
Yeah.
And we were trying to sell them Africa. As you do when you do anything about Africa, you have to sell Africa first.
Yeah.
They stopped us. They said, stop right there. You don't need to sell us the African ecosystem. We already see a lot of great African entrepreneurs coming to our office in Paris or in San Francisco, and they're looking for investment. And we really want to do it, but we don't know anything about Africa. If you guys do, just come, let's do it. It was a very short, direct conversation.
Yeah.
And another interesting thing was, I genuinely expected them to give us a sort of franchise.
Yeah.
And say, go away, go do your stuff. And it was never like that. Partech really got behind this project, said, you join the Partech family, you become Partech partners, and you build this new Partech strategy called Partech Africa with the full support of the whole platform of all our LPs. And that's how it happened. It was an interesting journey.
Yeah.
A long one, because I think between the moment we decided to do this and the moment we closed our first fund, it took almost 2 years.
Oh, wow.
Our first closing, which probably gave Cyril and I this opportunity to go to VC school. Because at the time, basically, you join this partnership and across 3 different funds, they're doing at least a deal per week.
Yeah.
You immediately join the IC. You get to shadow a partner. you get to ask very naive and very ignorant questions to a group of people who are quite benevolent about it and are happy to explain stuff. So by the time we close our fund, we've seen quite a few deals, and we sort of knew how we wanted to do this VC thing in Africa. I'm sorry, I told this in a very long way.
No.
But yeah, the
I
gist
wouldn't
of
have
it,
it any other way.
it was, I think there is another aspect to this which I find interesting, because it's always your friends who sort of conspire about you and make you take the biggest, most interesting moves in your life. Because Cyril, I learned later, had been preparing that conversation for months.
Oh, wow.
And he was talking to another friend who was with me in Dakar, and they were sort of trying to find out when would be the right moment to tell me, please quit Google and come do this.
Oh, wow.
And he told me that week, our common friend called him and said, I think he's ready. And he just picked his phone and called me. And I think that's what I like best about this. It is that your friends who've known you for years and years know before you that you should do this. and conspire to get you there, and tell you later how they made this happen.
Right.
That's
amazing.
How we're here.
That's amazing. And speaking of the funds, so the first fund was in 2017, 2018.
Yeah.
And that was the largest Africa fund at the time, at around $145 million.
Yeah.
And now you've done it again with Cyril, and doubled the size of that fund to be the largest VC fund in Africa, yet again, at $300 million. Congratulations, first of all. I know it was not easy, but how does that feel, and what are you sort of excited about?
I mean, there is one side aspect to this, which is when every time somebody say the largest Africa fund, I feel a bit nervous about it, because it sounds like a big responsibility.
Yeah.
The truth is, there should be many funds like ours across Africa. There's space for many more.
Yes.
And we need a lot more VC funds with people sitting on the ground, living life of, those who people are trying to solve problems for, to understand what these problems are and to be able to invest and support. So we need many more Partech Africas, and I see a lot of them coming up, and I hope we get a lot more of them. What it feels like was, and I'm sorry, I can't be just telling this nice and rosy. You to decide to do a VC fund, you have this romantic idea of what a VC is, which is that you will go hang out in cafes, meet great entrepreneurs. You love them. You always do. We'll talk about this later, but it is the most gratifying, interesting part of the job. Is that you get to sit with amazing people, and they educate you on problems you didn't know. They tell you about these inspiring visions they have, and they get you into it. So that's the romantic part. And then what I thought before was that after that coffee, you sign a check.
And then you're done.
Yes. And then you're part of the journey, and you go conquer the world. It's really a grind. It is talking to 100 of those entrepreneurs and investing in one. So it is turning down 99 of them. But it is also realizing that, with this large fund, you're going to invest in 20 companies. Again, which brings me back to the fact that we need more of those funds, because we need every year thousands of companies getting this investment, not 20.
Yes.
So it gives you some sort of humility around, your place in the ecosystem and what you do. No matter what, no matter how great your fund is, you're going to support 20 companies. You hope, a lot of them will be companies that matter. But on the grand scheme of things, you supported 20 entrepreneurs out of thousands. And so there is that aspect. And then there is the aspect of, okay, I raised this fund. I went through all of these conversations with LPs. It feels very personal. They've made a bet on you. And they make you know it. They tell you this, right? It's not just the key man closes and everything, but you feel like there is a commitment you have to them. And that commitment then, takes, adds a layer to I want to support entrepreneurs. It adds an important layer, which is I want to make this work for the LPs who decided to support me. Some of them, when I walked into the room, they were very far from doing VC in Africa.
Yeah.
And they sat and listened to you. You told them about Africa. You told them about what happens in the VC space. You told them about these entrepreneurs and what they're building. They bought in because of you.
Yeah.
And they put in their commitment. What do you owe them? Some responsibility around your funds,
yes.
of course. But I feel like we owe them, to find those entrepreneurs we told them about and make them successful.
Yeah.
Create really, really great success stories and big returns out of this. And so that turns into a sort of commitment to the ecosystem, because you know that if we all work hard and some of us make this work, then this whole story will continue on the trajectory we all want.
Yeah.
So there is that responsibility that comes immediately. The day you close, it is very funny how all of a sudden you put that hat of, I have to make this work for my LPs and for the whole ecosystem.
Yeah.
And so every time we are told, hey, you raise this large or the largest fund, this is what this sort of nervousness that comes with it.
Yeah. But good nervousness.
Yeah, well, it is, as we used to say in my previous job, it is uncomfortably exciting.
Ooh, I like that. Uncomfortably exciting.
Uncomfortably exciting.
Yeah.
And I think there is,
I agree.
in a way, you should always be doing something that is just, exciting, borderline uncomfortable.
Yes.
Stretching yourself a bit.
Yes.
So that's what it is.
Absolutely. Big believer in being slightly uncomfortable
Yeah.
and pushing outside of your comfort zone to grow and to do hard things.
Well,
do worthwhile things.
There is this part of doing things you don't know about. Learning about new things.
Yeah.
Working in fields you didn't know about before.
Yeah.
That is just, I think, gets you, feeds the attention deficit mind.
Yeah.
With new stuff. But there is also this sentiment that if it's been done before, it's been taken care of. You need to go get to the next thing.
Yeah.
And that's where you need to be uncomfortable, necessarily.
True. I agree. So when we think about where and when you closed the first fund in 2017, 2018 versus today, the ecosystem has really matured.
Yeah.
And not a lot of funds are in their second fund in a very, very young ecosystem. How do you think it's changed? What are the things that have changed so significantly about it over the last 5 years? And then what are the positive things you see in line with that? And then what are the concerns you have on how the ecosystem has evolved over the last 5 years?
Yeah, first, the truth is, yes, it's evolved a lot.
Yeah.
I mean, the numbers, I think it's 10x since we, so 2017, the whole ecosystem was raising less than 500 mil, 360. And this year, despite going through two crises, it is doing 3.5 billion, so 10x. The number of companies, startups that are raising has also grown.
Yeah.
The number of VC investors participating in the market has gone way up. So it seems like an ecosystem have come together. But first, I think this growth might lead us to think we matured. We have a long way to go. Right? Even though you see a lot of investors around, for instance, I think we still need a lot more seed investors.
Yes.
The ecosystem needs a lot more seed investment and a lot more seed investors. Despite everything going on, the ecosystem, again, needs a lot more local investors.
Yeah.
But we also still lack a lot of instruments in this ecosystem.
Yeah.
If you think about debt, for instance, debt is picking up. Venture debt is still very small and very needed. So there is that. But also, as you said, the first generation of funds are only getting into year 5, 6, 7. So we haven't closed the cycle yet. The obvious thing everybody will tell you is that we haven't shown enough exits yet.
Yeah.
There is a bigger question here, which is, have we seen enough companies go through these stages where, They work hard on exploring the problem space, find solutions, scale them, which happened a bit, but also not only scale these solutions, but sort of make these solutions really work, turn these solutions and these models into viable businesses that are sustainable, generating profit, generating cash flow. We need this to happen. And I think this will eventually lead to the liquidity we all
are looking for. Excitedly.
There is still a disconnect between us, VC, and the rest of the finance ecosystem in Africa. That will need to be addressed at some point. If we are going to get liquidity, if we're going to get plugged to the capital markets, we'll need to build those bridges.
Agree.
We must sound and look like very strange animal and people to the traditional financial sector. We must learn more about them, and they must learn more about us. But there is one thing that I'm sort of optimistic about that is happening naturally after 5 to 7 years. If you think about all of the companies that raised for the last, 8 years, it's about 3,000 rounds that were raised in Africa. It's as many companies that received capital, built teams, built technology, deployed, etc. And it's a lot of people who've learned within these companies. So one of the things I hope we can see now come out of it is all of this talent that's been trained, that's gone through 1, 2, 3 iterations, coming to the market. And hopefully it will mean 2 things. Much better hires in existing startups and new startups with entrepreneurs who walk in with a lot more experience. So despite everything going on, again, despite all of the crisis, I think like what started this whole ecosystem a few years ago, what was happening in 2017, 18 when we were launching the fund, has only been amplified. The talent pool has grown in size and in quality. The market they can address is more and more obviously, open, accessible to them. Capital will come more. There are way more champions to build in the next 5 years than there were ever in the last 5 years.
I agree.
So let's go and invest in them.
Oh, inspiring. I like
That's what we do. We have fun too. We're ready for it.
That is what we do, yes. So we're ready to invest. And maybe for the founders that don't know us very well, before we talk a little bit about the ecosystem environment and what's happened over the last year, what do you invest in as Partech Africa? Guess what do we invest in as Partech Africa?
One interesting thing is when we were raising Fund 1, people would ask us, what will you invest in? And we would remain intentionally vague because we felt like we didn't want to narrow down our scope or our focus. The market was not deep enough. And we would say we will invest in any tech-enabled business that's addressing foundational problems in Africa. Funny enough, after 5 years of investing, I think that is still the best definition of what we do. We will invest in, I think we have to stay open to the fact that technology will go into any aspect of African economies, and that we should be ready to invest in the startups that will go and transform these economies. However, I can say this to be helpful to entrepreneurs who are thinking, should I reach out to Lewam? Please reach out to Lewam, not to me. This, if you are building a tech business, if you want to raise anything between 1 million and 30 million, if your ambition, and I think that's important, is to build something not in one country, but across the region, you should talk to us. We will, because we can invest from seed all the way to Series C, D. We can enable and catalyze much larger tickets down the road. We are open to, if you're doing something around the informal sector or something in space that look very African and very difficult to pitch to outside investors, come pitch it to us, because this is what we live with. We will listen, and we will probably get it. So I don't think it's easy again to narrow down and say and tell people we will invest in this or that, because the reality is we should be willing to invest in spaces that we didn't think before would be, amenable to technology innovation.
Yeah.
If you think about our first fund, our first investment was in something that I did never expect to invest in. So our first investment was in Trade Depot in Nigeria. We met the team, Kachi, Michael, and Ruke, and they told us about FMCG distribution in Africa, which back then was not something you thought about when you thought technology.
Yeah.
Of course, we talked about e-commerce, but they were not talking about e-commerce. They were talking about the supply chain of these small mom and pop stores that distribute goods across Africa, and how that supply chain is broken, and how technology can help fix it, and how fixing it, at least improving it, will decrease the cost of logistics and distribution, and how this will impact the price of these goods to millions of African people.
Yeah.
And you sit down, you learn about this whole space that I was completely ignorant about before, and you see what they've built, and you realize that they can transform something that touches every single African.
Yeah.
And so I like to say that Trade Depot is very typical of what we are about, of what we should invest in. It is not just technology, it is operations. It is, you go into this informal world and you really get in there, and figure out how to make it work. It is not just software you put out there, it scales.
Yeah.
And this is what we care about. We think if you were going to build a large African champions, you should really be ready to build a lot of operations. And you should be thinking about, how do I use technology to make it possible to build and scale operations in a way that is sustainable, in a way where the capital is controlled, in a way that I actually can deliver this operation with a high standard of quality and user experience day in, day out at scale across Africa. We care a lot about that. And sorry, I sort of rambled in this response.
No, but I love it.
If you look at even the best fintech operations you'll see out there, they have networks of thousands, tens of thousands of agents on the ground.
Yeah.
They're also about operations. If you think about our investment in health tech in Nigeria, they have to go and serve thousands of SMEs, some of them even informal SMEs in Nigeria, get them on healthcare. They have to work with service providers across the country, integrate with them, settle with them. It is operations. It is always about operations, but it is always about how technology can all of a sudden make these very complex, messy, hard to deploy operations, make them, work and scale. And this is what we want to invest in. And I think there are a lot of entrepreneurs out there building this, actually.
I agree. That's a fantastic definition of what we do. I don't think I could do it any better myself. And maybe just to talk a little bit about how now the ecosystem has shifted, right? As venture investors, we think in a 10-year horizon. But the last few years for our ecosystem and the global ecosystem has been one of a downturn. And there's been a lot of skepticism, since Africa is still a very young ecosystem, about how does this bode for our future growth, our evolution, the next 5 or 10 years. And it's kind of been interesting to see the debate around that. I'm curious what you think, because obviously you're betting on this market personally and professionally, as am I. So I'm curious how you're thinking about, okay, what does this global downturn mean for us today? And then what does it mean for us tomorrow?
First, as you know, I love a debate. And I love this debate. We are Africa. We are not new to people being skeptical about what we are doing.
Very good point.
But so again, this new ecosystem is maturing. We've made our first baby steps, and all of a sudden we are all thinking about how we will exit, how we will show maturity. So it makes me think about two things. One, guys, we're new to this, right? I wouldn't say chill, but hey, we're figuring this out. Don't worry.
Yeah.
It's the right time to start asking that question and discussing it and working on it. If you look at the first generation of fund managers in Africa, we're all working in early stage.
Yeah.
In seed to series A, B.
Yeah.
Okay, we've relied on global investors to, take the next stage.
Yes.
And build Series C, Series D companies and scale them. This downturn meant that those global investors disappeared. So one question the ecosystem need to address is, how do we build that capacity in region?
Yeah.
We must work on that. Because we are 10 years horizon funds, that's how it works everywhere else, but you get to hand over your companies to the next stage.
Yeah.
And it's not going to be all of a sudden that the cycle ends at Series B and our companies exit. Let's be realistic.
Yeah.
We need to keep building them up. I think this downturn means a good thing in the sense that it's shortened the time needed before startups start thinking a lot about profitability, sustainability. So by Series B, C now, they will be working hard on that, which means the companies will sort of consolidate what they've built, consolidate their model, make sure it really, really works. But what I believe happens after that Series B company all of a sudden becomes profitable or even cash flow positive, is not an exit, it's expansion.
Yeah.
You have now a working model. Go take it everywhere. You're building a good business. Don't worry. Things will work out.
Yeah.
If you've made it a good business at this point. So this is the debate we are not having. But of course, we need a few exits. Of course, we need to show the proof points about the ecosystem that companies will get to that level and liquidity will happen, investors will get their money so that the cycle is closed and we can keep doing this.
Yeah.
So one of the debates is how will these exits happen?
Yeah.
It is not, again, a new debate. If you read about it, Europe went through the same conversation, and actually quite recently. If you look at the tech space, if you weren't in the US, you didn't really have very big companies next doors ready to write a check and acquire you. That's been unique to the US ecosystem.
Yeah.
So the European ecosystem had to go through all of those questions. And two things happened. One, of course, US companies came to make acquisition. But two, more interestingly, large European corporates from more traditional business sectors, I will say, that were getting disrupted by these startups, started working with them and acquiring and merging. And also, some of these companies became, very profitable businesses that attracted another type of capital, more patient capital. And I think all of these three things need to happen in our ecosystem.
Yeah.
Large global tech companies will come and make acquisitions. We've already had a few. Consolidation will happen. Some of these companies will merge and build even better companies. Large existing corporates will have to step in and acquire some of these companies as they're getting disrupted. And we will have to connect to the capital markets and to the PE funds and build liquidity. This is a lot of new words for us VCs.
Yeah.
So we have to learn about it, and we have to see a few success stories everybody can get behind. We already have a few, actually, if you think about it. We've already had a few nice exit stories. After the downturn, everybody turned suddenly very skeptical, as if those success stories were just part of the hype.
Yeah.
But the exits were not part of the hype.
Yeah.
The exits really happened, and they happened for more fundamental reasons than there is a hype.
Right.
Stripe acquired Paystack.
Yeah.
And Remit acquired Sendwave.
Yeah.
And more recently, InstaDeep. And these show you at least that there is a path to get there. And even if you step a few years back, and I like to say this and tell these entrepreneurs because I like how they're surprised by this perspective. We've already had tech unicorns in Africa who has built massive businesses generating a lot of profits. Many of them are public and trading publicly. It's called mobile network operators.
True.
They built a tech in Africa.
Yeah.
It was B2C models. They distributed it to everybody in every corner of Africa.
Yeah.
It was heavy operations. It required a lot of investments. And most of them are very, very profitable today. And many of them are multi-billion dollar revenue businesses.
Yes.
So we'll do it again. Easy.
Easy. We could absolutely replicate that.
Yeah.
And I think the other thing is to just contextualize that the global downturn, it happened to every market in the world. It happened to developed markets, it happened to emerging markets.
And you know what? It happened less to us than everywhere else.
It did, yeah.
Because first 2022, when the global VC world took a huge hit.
Yes.
Anywhere between 35% to 60%, depending on markets. The African market was flat.
True.
We maintained our stats because actually the drivers of growth were eventually stronger than the downturn.
Yeah.
So in 2023, with a bit of a lagging effect, we took a hit of 46%. LATAM took a 68% hit.
Yes.
Southeast Asia took a bigger hit.
Yeah.
So if you compound these 2 years, the downturn in Africa is actually much less severe than everywhere else. And it should be, because it's a growing ecosystem, because what is driving growth is still there.
Yeah.
So I want us to be a bit optimistic about our market. The downturn is here, it's global.
Yes.
The macro trends are also difficult. But despite all this, 500 startups in Africa raised money last year. 500, above 200K. There are many more that raised below that bar.
Wow.
3.5 billion were deployed. That's as much capital out there trying to solve problems.
Yeah. Which is amazing and inspiring to hear. And I think all of these things always need to be sort of brought up in context, not just in isolation, because it's easy to panic when it's in isolation. But
I think it's easy to panic also about, an emerging market like Africa that a lot of people don't know enough about. It's easy to panic about this technology thing because, frankly, it's growing so fast, it can't be real.
Yeah.
So it's easy to panic about it. But it's real, and it's happening in a market where it can only go up. There's a lot more to do. There are lots of problems to solve. There are a lot of opportunities out there. So
I 100% agree.
Optimism.
What is your Twitter? Afro Optimist? Is that what it says? Afro Tech Optimist?
Tech Optimist and Afro Optimist. But that's at this point.
All of the above.
That's at this point, it's a religion. It's
+1, I'm also a tech optimist and Afro optimist. And when you think about maybe like the sectors and the trends and innovations you're excited about now, especially in this environment, what is exciting to you?
So when you think about sectors in this investment landscape in Africa, it's been a lot about fintech.
Yeah.
And it's great because fintechs have sort of gone full cycle. We've seen fintech emerge from seed stage all the way to late stage fintechs, unicorns, and exits.
It's true.
So all the proof points, which makes it easier to invest in fintech than in anything else.
Yeah.
Which makes some people complain that, fintech again. In reality, I think we've barely scratched the surface in fintech. We've only explored a small corner of the map. And there is still a lot more to do in fintech. And I'm still very excited about that. But also, if you think about it, whether it's fintech or commerce or everywhere, there is still a lot of startups trying to figure out how to digitize the informal economy. And so in commerce, we have a lot to do. We all know and agree that commerce is going to end up eventually all online.
Yeah.
We all know that it's very hard so far to build an e-commerce company in Africa.
Yeah.
But guess what? It's hard everywhere.
It's true.
Show me an easy e-commerce play anywhere in the world.
Yeah.
So it's going to take time, but it is, for me, still a very exciting opportunity where we want to see stuff built. There are spaces that I've called my sources of frustration because I think they have big opportunities where we are not seeing yet anything happen. If you think about mobility in Africa, it is large, deep, fragmented, inefficient. The demand is growing faster than the infrastructure or the equipment can cope with, that is ripe for technology disruption. Where there has been very few mobility companies so far. But the technology will allow mobility companies to go in there and create new efficiencies. So it is something I'm excited about. If you think about agriculture, all right, very few agri-techs so far in Africa. A deep sector that employs 2/3 of Africans, that is ripe for disruption.
And a critical part of a lot of our economies.
Yes.
Yeah.
And this is why it's a source of frustration, because I know there are already. So one way to think about this is technology startups are not necessarily going to build these new economies that didn't exist.
Yes.
It is about existing economies. And there are economies that are there with all of the value chains in place, with a lot of actors and with a lot of capital flowing.
Yeah.
So if you think about them, it is, you're going into a really deep market, a really exciting market, and agriculture is one of those.
Yeah.
There is a growing trend in health that I'm really excited about, because first, it's just a basic need that needs to be addressed everywhere.
Yeah.
But also because it is another space where you have to take in a very fast growing demand. So you have to scale what's happening and not just maintain, but drastically improve the quality. Access to healthcare and the quality of healthcare service can really be improved by technology. I mean, what we invested in Reliance Health in Nigeria, and in a country where less than 3% of the population have access to any healthcare insurance, the ability to go and address the next segment of the pyramid and enroll hundreds of thousands of people onto their platform and work with this large network of small service providers everywhere in Nigeria. It is this right mix of operations again and technology that can unlock this huge market. And I think there's a lot more to build in healthcare. I could go on like this. The truth is, Lewam, I'm excited about everything we can build in Africa.
There's opportunity everywhere.
Everywhere.
I agree, 100%. And maybe just to shift gears a little bit, talking about sectors, now let's talk about countries. So most of the VCs in our market are focused on the 4 major markets, which are Nigeria, Kenya, South Africa, and Egypt. At Partech Africa, we've invested, and you've invested, in more than just those 4 markets. We've invested across 9 or 10 countries in Africa, which is pretty impressive. So I want to congratulate you on that first. But second, I think one of the things we've sort of seen emerge is Francophone Africa. And that wasn't really on the map 5 years ago, but now we're seeing that region really punch above its weight. I know we've made some few investments there already, but when we look at the data from 2023, according to our own Partech Africa report, about 52% of transactions that happened in Francophone Africa countries. I'm curious, from your perspective, who's also based in Dakar and Senegal, in a hub for tech in Francophone Africa, where do you see that market going? And how do you see that evolving? And what's the promise of that market today?
So I'll say what I've kept saying for years.
Yeah.
You don't look at Africa as Francophone Africa, Anglophone Africa. The way we think of it is there are 4 markets, 4 big markets that attract 80% of investment, and there is everything else.
Yes.
First, I think as an investor on the ground, the principle was our edge is actually this ability to go outside the big 4.
Yeah.
So we pushed hard, we roamed out, and we invested in Francophone Africa, we invested in Ethiopia, we invested in Uganda. We invested in these places people don't look at a lot.
Absolutely.
And when you look at now that pool outside the big 4, it's split. Half of it is Francophone, half of it is Anglophone. And so it's natural that you will see startups and innovation emerge everywhere.
Yeah.
Of course, being French speaking, we have an edge going into Francophone Africa. So we went there and we invested.
Yeah.
But there is one other thing that was going on in Francophone Africa that I'm not sure people realized. Francophone African startups come from these small countries, yes, these small markets. But some of these markets are very integrated.
Yeah.
So if you think about, you were saying Senegal as a hub for Francophone African technology, the reality is Senegal is part of not only ECOWAS, but the YMU zone, which is a single economic, financial, customs zone of 8 countries of 300 million people with a single regulator in fintech, with no custom barriers, where you can run a company from any of these countries and operate everywhere.
Yeah.
It's a big market. So it is actually, you should expect entrepreneurs to build from one of these markets and immediately address all markets. And guess what? Because they start from very small markets, they think international very early. So they learn this very hard, important skill, which is how to cross borders. Again, these borders are pretty open, but they have to build their product and make it work everywhere. So for instance, Wave is already operating in Senegal, Cote d'Ivoire, Mali, Burkina, Guinea, a lot of places, and is a proof that you can build across these borders. You can build very deep businesses, very large businesses in Francophone Africa. And maybe the language barrier, maybe just the culture meant that a lot of VCs from outside didn't see that early enough. But what we are seeing is after phenomena like Wave, a lot of people looked up and said, maybe I should check.
There's something here.
Yes. And so they started coming to Dakar, to Abidjan. Now they're going, a lot of them, to Kinshasa, and started discovering really similar large markets than what they were seeing in Lagos, in Nairobi. I like the fact that all of a sudden we get a lot of visiting investors in Dakar, and that they go and engage these startups and find, entrepreneurs that they get really excited about. So that is driving a lot of Francophone African growth recently. As we get excited about Francophone Africa, this is not about Francophone Africa. In the last 5 years, about 35 countries in Africa received VC investment. So take out the big 4 and think about these 30 markets where there are people who received, no matter how small a check, who are building some innovation. And your only problem is, why are you not visiting every single one of these markets to invest? I think that there are gems sitting out there that people need to go and find and scale. Now, again, I'm biased. Come to Dakar. Come to Dakar. You will find a vibrant hub. I think Dakar has also one other thing going for it, which is very similar to what I see in Nairobi. It's an easy city to attract talent. And as we think about investment and growing technology, I think this is an important piece.
Factor.
How do you attract global talent to build a startup in Africa? And cities that attract talent will naturally turn into hubs. And that requires a few factors. Again, decent infrastructure, not amazing, but just decent enough that it works. And probably logistics come into play, all of that. But Dakar had that going for it, which has made it actually a place where you will find a lot of startups in Dakar have been started by somebody from Benin, from Cote d'Ivoire, from Mali. I find it interesting that half of the deal flow I see in Dakar is started by non-Senegalese people.
Oh, wow.
Yeah. I think that's probably true in a few African countries, and they're going to become hubs inevitably. So, let all the other Africans in. Invite them to come and build companies in your country. That's how you do it. This is for governments. Think about it this way. Make it easy for anybody to fly into your country, settle and start a company.
And build something.
That's how you build an ecosystem.
Great advice. I hope there are governments listening that take that advice.
I know every single government is listening to your podcast.
Yes,
Lewam.
every single government is listening to my podcast. It's the most important podcast for all governments.
I know you call them each personally to ask them to listen.
To just make sure that they listened to the episode, just confirm, and then ask them if they have any notes or questions.
Do we drop names?
Absolutely.
Do we drop names?
We don't drop names.
Okay.
Not on this podcast. That's another podcast, maybe. Not on this podcast. No, I completely agree. I think what would be interesting to hear from you is, because a lot of founders for the first time are experiencing a downturn because our ecosystem, again, it's fairly young, and we have a lot of founders that haven't really seen a downturn, who maybe started their businesses when we were kind of in a booming time, and then also saw like just a bull market globally, which influenced us, right? We had a lot of global investors coming to this market and writing checks and writing really big checks, both early and late stage. And now it's sort of tapered out. And people are adjusting maybe to the reality of where our market is today or where the global market really is today. So I'm curious, do you have like advice or perspective to share with founders? Because I'm sure a lot of people are curious, like, what does Tidjane think? How is he thinking about it?
They shouldn't, really. They shouldn't. I'm an unforgivable optimist. But I think there are two perspectives here.
Yeah.
If you're a founder who's never raised capital before, good news for you. This is as hard as it was ever.
Yeah, fair.
Just go out there and build.
Yeah.
You have the same chance and the same probability of success as you had before.
True.
And your ability to raise capital has not significantly decreased.
Yeah.
So nothing's changed, really. And because, again, we have to remember the majority of founders who are going to raise in the next 5 years have never raised before.
True.
So this is the bigger pool. Nothing new for them. It's hard, but you'll get it.
Yeah.
If you're a founder who've already raised capital, yes, let's all acknowledge that there was a bit of a bull market in 2021 that maybe it won't be... Actually, I still think it was still hard in 2021 to raise money. It's just those who did raised on very good terms.
Yeah.
But again, in 2021, maybe 400 startups raised money in Africa.
True.
In 2023, 500 and something startups raised money.
True.
So it's as difficult as it was. But the terms are tough, which means that you have to acknowledge, adjust to these new terms.
Yeah.
I think good founders adjust to just change in context very quickly and execute on it. I was impressed to watch some of our portfolio founders very early in 2022 look at the market, read the sign, and just adjust, switch to this new. And it's okay to be a founder who spends tons of capital when capital is cheap, and who becomes very, very strict about capital when capital is expensive. That's what founders should be.
True.
If the market is bull, take the opportunity, run with it.
Yeah.
The market slows down, read the room early, change your tack, and run with this new market. So I was actually very impressed with watching founders do this in our portfolio, and you have to, as a founder, have this conversation with your board and your investors. Terms have changed.
Yeah.
If I need to raise money now, maybe I will not be able to get it in the old terms, And the sooner the whole cap table adjusts to this reality, the better it is for everybody.
100%.
And then go out there and still raise, because you need the cash to grow. You need the cash to expand your business. You need the cash to, build IP. Still go out there and raise. With the new terms, you will get your capital.
Yeah.
Good businesses will raise, but don't get stuck in the old terms. This is what I've seen, disaster happen, where entrepreneurs go out there, they don't listen, and or they do listen and the investors don't. But for some reason, they don't accept the new terms until it is really, really late.
Yeah.
And then it's so funny. What was a few months before a good but expensive deal becomes very suddenly a distressed deal.
True.
And a lot of people don't want to touch it.
Yeah.
And maybe we need to expand on why a lot of people don't want to touch a distressed deal. But it then puts you in this very, severe crisis that you could have avoided just a few months back. So read the room, take in the new terms, and raise with them. It's okay. Terms will improve again when you raise next time.
Yeah. I think that's very, very important perspective, because I think you're right. A lot of people are still adjusting to the new reality, and the founders that adjust to it quickly, I think, will do the best.
They win.
And we've already seen this level of resilience in the ecosystem, right? It was just the last few years that were a bull market, that were an outlier. Before that, we had this level of resilience. So I think it's just a matter of adjusting.
Actually, it's when you think about it, African founders have been historically more frugal than everybody else.
That's true.
So what they're being asked to do today is nothing new to them.
It's not new.
But there is one reason to adjust quickly, one more reason to adjust quickly and run with the market. In this tough market, it's very likely that if you go and raise, you will have a very open field to grow and expand.
Yes.
This is the best moment to be, taking a market, building a champion.
I agree.
So you have a choice. You can sit there and wait for it to pass and not grow and freeze your business. Or you can go out there and use it as an opportunity to just take over.
Yeah, completely agree.
And 5 years down the road, we'll be looking back at the champions and marveling at how much they built during the downturn.
Yeah, I agree. I think it's more a time to build now than it ever has been.
And it's more of a time to invest now.
Yes, agree.
We as investors must also see that we should be investing now in what will be the champions and unicorns people talk about in 3 to 5 years.
Yeah, which we're actively doing.
We're actively doing.
Partech Africa.
We're open. We're ready.
Open for business.
Yeah.
Great. And maybe just to shift gears before we wrap this conversation.
Mm-hmm.
Okay, this is just a question I'm always curious about with people that are from Africa, that go abroad, study abroad, work abroad, and then decide to come back.
Like you.
Like me.
Okay.
And like you. Why?
Why what? Why did we go out?
Why did we come back? Why did we come back?
It's actually a strangely difficult question. Because probably we all come back for very personal and very different reasons.
Yeah.
I can talk to my reasons, but again, it will ultimately be about family, about where I see myself living and growing. But there is a component that may be common. I think if you are sort of a bit of an entrepreneur, if you like solving problems, there is no better place to be. There is no better place to be to, feel like you are impactful, to solve interesting, difficult, complex problems that you care about than back home in Africa. So it always felt like going abroad was about preparing for that, nothing else. But still, I will quote here my late dad, who surprised me when I came back. And he said, you don't have to come back. You don't have to come back because people should not think they can only settle and leave where they were born. You settle and leave where you can be most useful. And you guys, your generation, are lucky that the playground where you have to choose is large. It's the whole world. So go find where you want to settle and settle there. Just live a useful life. And so I think this puts back into perspective the fact that, okay, you were born in Kenya, you studied in the US, you could be sitting next in China doing stuff. It's okay. Go build. But some of us, hopefully a significant portion now, because we need it, will choose the place to build as Africa. But I'm biased. I think it's the best place to build anything right now.
I'm also biased.
If I was, I keep telling people, if I was 25 today, I would probably packing for Lagos to build a business. Go Nigeria. But I would, because I would assume that having a choice, having a choice to go anywhere in the world, I would still feel like some of these African cities are just the best opportunity right now for people in that age bracket.
I like that perspective, where you're the most useful.
Yeah.
Because it's kind of a bit hard to articulate why. Even for me, it's hard to articulate exactly why.
Why did you come back, Lewam?
Oof. I'm not the one being interviewed today.
Oh, yes, you are.
That's you.
Why
We're interviewing you.
Why?
Good question.
Because I have to say this. When we were hiring you to the team, we were sitting there looking at you, at what you're doing in the US. We felt it was great. It was exciting. It was exposing you to all emerging markets. And we were like, oh, please let her accept to come back to Africa and work with us. And surprisingly, not very surprisingly, when people know you, you did. I know there is an ultimate goal to be president of Africa someday. Why did you come back?
Thank you for throwing that out there and manifesting it.
People need to know this.
People do need to know. We need to start the campaign.
You need to be president someday.
Today.
You have not figured out which country yet.
Right.
It might need to be the whole continent.
It might need to be the whole continent,
We're
honestly.
all okay
the way
with
things
this.
are going, it might need to be the whole continent.
Yes, and we were your first supporters.
Yeah,
please let that be known.
Let it be noted. It'll be noted today on the podcast. Yeah, absolutely. No, I think it's what you said. I think even in going away, even in moving to the US, I always knew I was going to come back. I never doubted it, and I never felt the same level of excitement and purpose. And fortunately or unfortunately, I'm one of those people that needs a reason to wake up in the morning at 6 a.m., as I tend to do.
Yeah.
I feel like
I can't find a reason for 6 a.m.
Yeah, I do. This is my reason for 6 a.m. But I think it's that. I think it's just like having a purpose and this being that purpose. And I think someone gave me this like framework 10 years ago, which was, if you could solve one problem with your life, what would it be? Yeah. And then working backwards from that, figuring out what do you have that can help solve that problem. Yeah. And for me, actually, that's a question I should ask you, because I'm curious what your answer is. I have my answer. My answer, if I could solve anything, would be to move our markets forward from an economic growth perspective and from a real economic growth perspective. If I look at who I am, what I've done, what my skill sets are, the best way I know how is to push money towards people that are building things that can create that growth and impact that I want to see. Yeah. That's the skill set, for better or worse, that I've developed, and that I've been lucky and privileged enough to develop, right? And so using that skill set to work towards that problem and push towards that problem has been my sense of purpose, has been my reason to wake up in the morning. It's a
great purpose. I like it.
Yeah.
It is.
What's yours?
It's grounded. Oh, mine is not grounded. I'm a nerd. I would say space travel or unlimited free energy or something like that.
Ooh, unlimited free energy. I like that.
Yeah, we have something called the sun, but we're figuring that out yet.
Still making it work.
Yes, but I feel like so this is maybe age speaking. Over time, I became more and more humble around what the one thing I would like to solve. In the sense that, of course, like when you were 20, as you said, there is a component to what you want, what you can solve with what you have, what you know how to do, the skill set. At 20, strangely enough, you have very little skill set, but you assume you could build any skill set.
Yes.
So you were more, your scope, your range about what problem you would like to solve is much wider.
Yeah.
When you close to 50, you sort of become a bit more pragmatic about your skill set.
Yeah.
And so a bit more pragmatic about what you can help solve for. Funny enough, I feel like what we are doing is part of a broader topic of education and enablement. And I've always said that, my missed career is in education. Until somebody pointed out that, again, education is about enablement. Yeah. And what I'm doing today is still about enablement.
Yeah.
And
ooh, I like that.
Yeah, and then it becomes a question of who do you want to enable. And I find in Africa tons of people I want to enable.
Yeah.
No, that's the place I'll do it.
Wow. That's a much better answer to John.
I've been thinking about this much longer. Much longer. Like, why did I wake up this morning again? For a few more years.
Yeah.
But I have a new plan. I have a new plan to enable somebody to become president.
Oh, okay. I'm glad we're focused.
Yes,
I was worried that you were not focusing on the overarching goal of making me president.
I'm just trying to help you figure out which country.
Step by step, exactly. I think we decided the continent, actually. I think that's what we decided. Okay. This is step 1, step 2 to step 5, and then we'll get there. And maybe just to end our conversation, this is a fun question.
Ooh.
Yeah. I'm always with the fun. I know all the questions were fun, but this one, this one is fun.
Not ooh, that's great.
This one is fun.
Okay.
If you had one wish for our ecosystem, what would it be? If you could literally just wave a wand.
Why does it have to be only one?
You just get one. That's the rules. Oh. You have to, it forces you to focus on the one you want the most. So what would it be if you could just wave a wand and it will come true? Biggest dreams. What would it be?
Unfortunately, I'll have to be very pragmatic about this. I'll think midterm.
Yes.
And I think midterm, our ecosystem needs to connect to local money in many, many ways. In the way startups access funding, especially debt.
Yeah.
In the way startups generate, cash flow and then attract PE money, attract more local investment.
Yeah.
In the way we create liquidity.
Yeah.
Liquid markets. In the way we create secondary markets in Africa. So it will be about connecting flows of capital, but to more local, more sort of built in region flows of capital. That would be my wish. I'm sorry, it is very boring and technical.
It's a fantastic wish. I agree. And I think in the medium term and even in the long term, that's what we'll need to get to a level of significant, an even bigger level of scale.
But also unlimited energy and space travel.
Okay, so, I like unlimited energy.
Yes.
Space travel, but I'm with you on the unlimited energy.
Okay.
Great. Well, thank you so much for joining me.
Thank you for this.
This was so fun.
So this was the first round, and the second round is me interviewing you.
Oh,
right.
No, I don't think we agreed to that. I'm not sure. I don't think we agreed. I'm not sure we agreed to that. When I become president, maybe, of Africa, stay focused.
Okay.
Thank you so much, Tidjane.
Thank you.
Thank you for tuning in to the Africa Playbook. Please follow us on Substack, Spotify, Twitter, and Apple Podcasts. Until next time.
My name is Tidjane, and this has been the Africa Playbook with Lewam.